So today I'm going to do something completely different, and this is going to surprise many. But our industry is set up for people to fail, in my opinion. And what I mean by that is most people don't realize that there are three lending platforms. You have your retail depository lenders, you have your independent mortgage bankers, and you have mortgage brokers. So who do you go to? Fortunately for me, I've had a interesting career. I've worked for retail giants like Citibank, Wells Fargo. I've been a mortgage broker, and I've worked in the last 7 years as an independent mortgage banker. And there are strengths and weaknesses for each platform. And today, I'm bringing in an old friend from high school, St. Anthony's, right? Could you imagine that back in 1994, when we graduated high school, this is Tom Mannix from Citibank, that this is what we would have chosen as our career.
Yeah, scary.
Scary, correct?
Scary.
Yeah. So if you're at St. Anthony's and you're going to school there, this is what you get. Unfortunately. So I appreciate you coming in today to talk a little bit about
Thanks, John. Thanks for having me.
Yeah, man, what it is that you do. Again, I was at Citibank probably over 10 years ago, and you're actually, it's interesting because in today's lending environment, people often are going from bank to bank and hopping around, trying to find that right fit for them. And you've been at Citibank, I believe you said, how many years? 10?
Yeah, I'm going coming up on 10 years now.
10 years.
Citibank.
Yeah, so you're growing roots.
Yeah, for sure. When I got in there, you were there, and it's funny we had that connection, with our background together. So yeah, I remember you were there. But yeah, I've been there for about 10 years, and it's been good.
It's been good. So the model is a little bit different, obviously, from what you do and what I do, and we can talk about the different lending platforms. So as a retail banker, there are certain programs and certain advantages that you have that I don't, and there are certain advantages that I have over you, right? So again, this goes back to where a consumer is kind of set up to fail because they don't know where to go.
Right.
Right. And the one nice thing about working with you is that if you run into a situation with a client that you can't help, that there's resources for them. For example, you might refer them to me.
Right.
In certain instances, I may have a client that I know from my experience at Citibank that would benefit them. I'm going to do the right thing, and I'm going to refer them to you because it's what's best for the client.
That's exactly right.
So, so one of the distinctions I found in terms of working in a big retail bank like Citibank was, I think the appetite for jumbo loans, clients that are affluent, they have large portfolios. So talk to me about, that product and what's available to people.
Yeah, customers who bank with Citibank, they're able to benefit from some relationship pricing, where they'll get a discount on the rates depending on how much in assets they have in post-closing assets. So you'll have those customers that, like you said, maybe they go to another bank and they get a rate quote, but they don't realize that with the deposits that they have with us, they're able to get maybe 0.25% off the interest rate, which is already a pretty competitive interest rate, like you said, on our jumbo pricing. A lot of our jumbo clients are just that. They have assets with us. They have assets on deposit, and if you have anywhere between $200,000 and $500,000 with Citibank and post-closing assets, you're going to get 0.25% off the rate, and it goes up from there. So from between 500 to $1 million, you're getting 3/8 off the rate, and $1 million to $2 million, you're going to get 1/2, and over $2 million, like we were talking about before, that client, I was able to help somebody get 5/8 off of an already pretty discounted rate on our jumbo pricing. So, and even if somebody just wants to open up an account, that's where the banks like Citibank, they want you to have money on deposit. They want to see they open up an account with us, and then they want you to have a direct deposit and stuff like that. And then they can start cross-selling you their other products. But even if somebody just wanted to open up an account, you get $500 off your closing costs, which again, our closing costs, our fees are, they're still
reasonable,
very reasonable when you talk about a bank's junk fees.
Right.
So yeah, that's where relationship pricing is definitely
an advantage.
An advantage for sure.
Yeah, and the reality is too, like even if you, let's say, are not banking with Citibank, or if you have funds in another bank, you could move them to your bank and then get that discounted rate.
Yeah, absolutely. And you can even move investment accounts. You can do something called like an in-kind transfer, where you can tell the customer, hey, you can still invest. You've got your account with, let's say, Wells Fargo, or you're with that particular investment person. You can make that transfer. You can invest in the same things that you're already invested in.
Right.
Whether it be equities or whatever it is that you're invested in. You can just move the portfolio over, and there's going to be no change. And once we see that money move over, you're able to benefit from the discount as well. So whether it's cash or investments, you can move that money over and benefit.
Yeah, it's honestly it's a tremendous opportunity for the high net worth clients in that capacity. And another program that I remembered that was near and dear to my heart was called a home run loan. And I think for when I was using it, I think it was more for first time home buyers, but it's kind of morphed into more opportunities for anyone really. So can you talk a little bit about the home run and where you see that being a benefit? Because again, I mean, I do a lot of Sony Mae. I work with CDCLI on Long Island, trying to always take advantage of lower interest rates, discounts, grants, things of that nature. And Home Run is probably one of my favorite programs, unfortunately, because again, the platform issue, right? Because we can't always cross platforms where, like, I know Citibank has this great program. Unfortunately, I can't write that loan myself. All I could do is refer it to Tom. So, share a little bit about how awesome that program is.
Yeah, what's great about that program is, you have your conforming rates right now, which might be, maybe in the mid to low 7s, and then you have our jumbo rates, which might be in the high 6s. It's somewhere in between as far as a rate goes. Mm-hmm. So you're benefiting from a better rate than you would on a conforming loan. The home run product is really geared towards somebody who you can do it with 20% down, but if you want to just put as little as 3% down and you qualify, you can do the home run loan and not have to pay any PMI, which is huge. As you know, like the PMI, if you're going to borrow $400,000, $500,000, $600,000, the monthly PMI payment could be pretty considerable. So putting 3% down, 5% down, 10% down, you're not paying any PMI. That's one of the first advantages of home run. Mm-hmm. The other one was the rate, as I said, which is obviously big too. And then also the thing with the home run loan is your income. There are income restrictions.
As most first time home buyer programs.
Sure, yeah. So if you can, but it's not like it's. I saw in one of your previous posts where you were like, hey, you can't afford this house. It's just you can't do it because it's
the 80% of
the 80% of the median income. But what's great about the home run product is that the income just needs to be less than your combined income on the application needs to be less than $187,560, which you could still buy a pretty a decent house on Long Island with that type of income.
Sure. Well, it really comes down to your debt, right? What kind of debt you carry.
What kind of monthly obligations?
Because it's all it's right. Sure. So I mean, if you're under the 187,000, and that's in line with Sony Mae, and that's why I'm so surprised that we're not seeing more people looking at the Sony Mae programs, because again, similar, you're getting heavily discounted rates right now. Those are in the 6s, which could be anywhere from almost a full percent to say a 0.5% better than what's out there on conventional loans. And then who knows if people are charging points to get those higher rates anyway in the 7s.
Exactly.
So there's typically no points with with the Sony Mae loans or the home run. And you actually brought up something before when we were talking about, which you haven't covered yet, was the closing cost credit.
Sure, yeah. And that's another great thing about it is, I want to go back with the home run loan, though. If the property is located in a low to moderate income census tract, the home run loan is fantastic. There's no income limits. You could make as much as you want. But any property in Nassau or Suffolk County now, where if your income is less than 187, you can still qualify for the home run. And on top of that, you qualify for a $7,500 lender credit, which you just have to do a home buyers counseling course, which now post COVID they're doing a lot of those just online, or they do it right over the phone, and you're providing the same documentation to this third party that you were going to send to me anyway. So they're doing their analysis, they're doing their cash flow analysis, and it's basically the same thing. And then what will happen there is they issue you a certificate The certificate comes my way. I send that to the underwriter, and that automatically gives you credit to get that $7,500, which is great.
And it's the same. And it's the same requirement for other first-time home buyer programs having that certification. But you know what? At the end of the day, if you're getting the benefits that we're talking about, just spending a little bit more time and having to do a certificate, it's worth it.
Yeah, 100%. And I've told people, I've spoken to people, and they're like, it's got to be a catch. There's got to be a catch to it. And that $7,500 is important also, John. It's not a lien on the property. It's not like something where you sell the property and you've got to pay that $7,500 back. It's not a loan, so you're not paying it back. It's free money. It's exactly what it is. It's free money.
And you do something really smart with it as well, depending on your client's needs, right? Because $7,500 will go a long way and offset some of their closing costs. But if they do have the necessary money to close, then what you're doing is you're saying, hey, let's take that $7,500 and let's buy down your interest rate with it.
Correct.
And especially in a market like today where the rates are higher, well, you're getting that discounted rate to begin with, and then you can even discount it even further.
Correct. Yeah. If you're borrowing, let's say $400,000, and you want to pay 1 point will be $4,000. Well, okay, you can buy a point. Now you're lowering your rate, and you know what? If that 1 point costs $4,000, I'm taking it from the $7,500. I'm still giving you a $3,500 credit. So that's the type of conversations that I have with those types of clients who want to take advantage of that credit too. Yeah.
So and I think the program has developed into being more lenient, because I remember from my memory, I remember calling in those neighborhoods, those specific demographics, and reaching out to realtors. Hey, I got this program. Did that change? Did that evolve, or was it always that you can buy anywhere in the state? It's just a matter of the income if you qualify.
Yeah, it just depends if you qualify income wise. Some of the one restriction which comes up is the you have to have some kind of rental housing history.
Right.
So if you don't, but even if you don't, they lower the debt to income ratios. So
makes it a little harder to qualify.
Makes it a little harder to qualify if you're just living at home, living rent free, paying nothing to mom and dad, living in the basement.
Right.
But if you can show that rental history, that's when the ratios expand a little bit, and you're able to make it a little bit easier to qualify.
Right. So you've been in the industry
23 years.
23 years, and you've seemed to have stayed in the retail lender platform mostly. I've kind of bounced a little bit back and forth. I found my comfort zone here as an independent banker, simply because I look at it as I have my cake and eat it too. I get the stability of a large lending institution, but I also have the flexibility of a broker. People coming to you directly as because they do local banking with you, doesn't mean that that's going to be the best option for you. Is there anything else at Citibank right now that you guys have that you feel is like a differentiator?
Oh, well, the home run product and our relationship pricing and certainly the jumbo pricing. Just the jumbo pricing itself is pretty good to begin with. Most, I would say, brokers or anything like that, they're probably priced somewhere for a jumbo loan now, probably in the sevens. We were talking before how I was able to really help out somebody who had a relationship with Citibank. He was able to benefit from a nice jumbo rate and then also get the reduction. But it's just that having that name, having that Citibank name behind you, sometimes it does win some deals.
Yeah.
But like you said, to your point, like we were talking before about, hey, somebody's buying a mixed use property. Maybe someone needs a reverse mortgage. Those are products that we don't have. But overall, it's those are our strong points for sure.
Yeah, and I think at the end of the day, I think when it comes down to anybody that's shopping for a mortgage, you really should be looking at those three. You should consult with a mortgage broker. You should consult with an independent banker, and you should consult with a retail bank. That's really going to give you the best bang for your buck, and that's the best advice that I could possibly give anyone that's looking out for a mortgage today. Mr. Mannix.
Mr. Trama.
I really appreciate you coming in here and spending a little bit of time with us, talking a little bit about what you do. This gentleman here is a great person, great at what he does. If you have a relationship with Citibank now, he's definitely the guy I would call. Another thing I will mention too, when you are shopping for a mortgage, always ask about their experience. He's been in business for 20 plus years. I've been in the business for 20 plus years. You may end up getting somebody on the phone that doesn't have the experience. And that could change your whole entire outlook of how your mortgage process goes. So make sure you ask how long somebody's been in the business. So how does somebody reach out to you, Tom?
Best way to reach me, you can Google my name. You can get in touch with, email me, text me, call me.
What is your email address?
Email is thomas.mannix@citi.com. Citi spelled CITI, obviously.
And Mannix is spelled?
Mannix, Mannix.
There you
I'm
go.
told it was a TV show at one point, but I don't remember.
Is that
the
right?
show. Yeah, it was a TV show. Mannix, back in the 60s.
Thinking of like Madlock.
No, it wasn't Madlock. He was a detective. We'd have teachers at St. Anthony's that would be like, "Hey, you remember Mannix?" And I'd be like, "I don't remember the show. I was too young for it." But yeah,
before my time.
before my time. But yeah, Mannix. Thomas.mannix@citi.com or can I
And
give
what's
my
your phone? Of course.
Yeah, 516-242-3159. It's the best number to reach me.
Love you, brother. Good to see you again.
Love you. Thank you, John.